Hey everyone, and welcome back to another video for today. So we're continuing here on this pre-earnings series. Amazon is expected to report its quarterly figures Thursday after hours. That's October 30. Now Amazon, despite its size and popularity, Amazon year to date has done absolutely nothing. Absolutely nothing. Over the past 3 years, stock is up 85.9%. Over the past 12 months, stock is up 17.3%. Yes, over the past 5 years, this is a company that is underperforming the market. This is a company worth $2.37 trillion. And of course, more recently, it was in the headlines because of the AWS issues. That's also something that will definitely be discussed during the next earnings call. The damage, what they've been hearing from customers, etc., etc. It's not like what we had with CrowdStrike a year or so ago. But yeah, funny thing here is with AWS's issues, stock was actually up. Stock is up 2.6% at the time of making this video. And so in today's video, let's go over, well, Amazon's business, why this remains one of my highest conviction stocks in my retirement portfolio. It's the number 2 position behind Meta. I still view this as one of the best companies to own in your portfolio. Yes, I don't care much about the past underperformance. You're buying Amazon today. You're not buying the Amazon of 2020 or 2021 or 2022. You're buying Amazon of 2025 because you think that Amazon in 2030 is going to be much bigger, much more profitable, probably with less shares outstanding as well, and it's going to beat the market comfortably, or at least that's my assumptions. Of course, you can make your own down in the comment section below. Hit all the buttons, would really appreciate that. If you want to support me even further, do check out the link down in the description and in the pinned comment to the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. And also a special thanks to Fiscal.ai for sponsoring this video. You'll get 15% off if you use my link down in the description and in the pinned comment. New users will get to try Fiscal Pro for free for 2 weeks. Everything that you're going to see in this video comes from this platform right here, Fiscal.ai, and especially during an earnings season, it is extremely useful. For example, you get the transcript, you get the reports, you get the presentations as well, all on the platform. And if you don't want to read all of it, you just click on the AI summary. This was, of course, from last quarter, and it gives you everything you need to know. And if you want to know more, you can ask specific questions. Now, more recently, you've probably heard this, that Amazon plans to replace 600,000 US jobs with robots. People were writing things that were taking a bit out of context. It's not that Amazon is going to lay off 600,000 employees. No, they said the following thing. Amazon's automation team expects the company can avoid hiring more than 160,000 people in the United States it would otherwise need by 2027. That would save about 30 cents on each item that Amazon picks, packs, delivers to customers. That's not all. Executive told Amazon's board last year, by the way, and this means that they could reduce the prices of certain items, which of course tackles the whole inflation story. Now, executive told Amazon's board last year that they hoped robotic automation would allow the company to continue to avoid adding to its US workforce in the coming years, even though they expect to sell twice as many products by 2033. That would translate to more than 600,000 people whom Amazon didn't need to hire. So again, making assumptions here. We don't know exactly what is going to happen, but yes, I do expect Amazon, and Amazon is a huge robotics player, internally that is. But yeah, I do expect Amazon to use robots more and more as the years go by. And this would, of course, translate into Amazon being a more productive, efficient, and profitable company. And for those that don't know, Amazon is the second largest employer in the United States with almost 1.2 million employees. Now, of course, this whole story, not just this one, but the one with AI as well, how's AI going to impact the workforce? Are plenty of people going to lose their jobs? Are new jobs going to be created thanks to AI? Who's going to take care of these robots? You will still need some humans, etc., etc. I honestly don't know the answer. It's something, it's an open-ended debate, question. We'll have to wait and see. People will lose their jobs. People will find new jobs. We'll have to wait and see. But now, continuing here with Amazon, This is basically what I'm looking for in the report and especially in the earnings call. One, AWS growth, an acceleration in growth, continued growth, because that was one of, let's say, the issues with the company and the underperformance of the stock is AWS growth. We've seen Azure grow fast, we've seen Google Cloud grow fast, but AWS growth has been slow-ish, right? Of course, the size of it is bigger than Azure and Google Cloud. That's also something that people need to know. But I do expect AWS growth to start to re-accelerate, especially thanks to Anthropic. Then, like I said at the start, maybe some comments on the AWS issue that just occurred, the damage, conversations with customers, how's that going to impact the business in the upcoming quarters. That should be mentioned during the call. Then, yes, some comments on consumer spending. Tariff hit, what do they see? Right? Amazon is a huge company. Amazon, as you can see right here, is expected to generate $707.8 billion in revenue in fiscal 25. It's expected to generate $860.7 billion in fiscal 2027. So yes, of course, a lot of that revenue does not only come from Amazon.com, comes from advertising, subscription, third-party seller services, and AWS, of course. But after Walmart, you've got Amazon. We will get a lot of information on, well, the actual state of the consumer. And then, this is just me personally, please, no 5-minute answers with no answer. If you remember 3 months ago during the earnings call, they just kept on talking and talking and talking without really giving us a clear answer. So please, Andy Jassy and whoever is going to be on the call, please, no more, por favor. Then robotics. We've just talked about the robotics stuff. Maybe we're going to hear a bit more about that. Last quarter, we've actually heard a little bit about Project Purpose. We've also heard a little bit more about Amazon Pharmacy, where they've seen continued 50% year-over-year growth. Again, Amazon is one of those companies that over the years has successfully grown its total addressable market. I mean, this was Amazon back in 2025, $105.2 billion in revenue. Last 12 months, $664.3 billion in revenue. Now, of course, throughout all of these years, Amazon has really not been focusing that much on being the extremely profitable business, right? Every dollar they make, they just kept on reinvesting in the business. That's something that they've been doing from the start. But if you look at free cash flow, and especially what free cash flow is expected to be for the next coming fiscal years, it's expected to be $23.8 billion in fiscal 25, but then $53.1 billion in fiscal 26, and $84.6 billion in fiscal 27. It's huge growth expected in the upcoming 2 years. We've also seen that gross profit margin over the last 10 years has improved, has gone from 33% to close to 50%. Again, free cash flow has been quite low for this company, but I do think that as this company becomes more and more profitable, or as they decide to show the more profitable side of the business, we're going to see free cash flow margin go up. As you can see, free cash flow a year ago was close to $50 billion over the last 12 months. I do think that once they flip the switch, you're going to see the story change here for Amazon. One thing that we have already seen is the evolution of net income, right? Net income last 12 months, $70.6 billion. We were at a loss of $2.7 billion just under 3 years ago. This is the power that Amazon has. Flip of a switch, and this is what happens. It's insane. It's insane. But of course, right now, sentiment is a bit negative, I would say, because of this, right? Because of AWS growth. This is last 12 months growth. It's been around 18.5, 18.4, 18.1. But still, this is a business, $116.3 billion of just AWS run rate, $123 billion. It's incredible. It's incredible. Margin last quarter did take a hit, so only 33%. The quarter before that, that was closer to 39%. But this is still a business that alone would probably be worth $1 trillion, right? I'm asking you the question, how much would you be paying for just owning, let's say, a stock, AWS? Would you be willing to pay $1 trillion in market cap, less than $1 trillion, over $1 trillion? Right? Because this is what you get when you buy Amazon. You pay $2 point something trillion, But in my opinion, $1 trillion out of it is definitely AWS. And then the rest, the rest is, well, all of this, right? Third-party seller services, advertising services, subscription, and online stores. By the way, third-party seller services, advertising, and subscription, those are faster growing segments and also higher margin segments than the online stores. Of course, online stores revenue-wise is a huge chunk of the revenue of the overall business. But when we talk about margins, profitability, the others are much higher. And those are the segments that have been growing much, much faster over the last couple of years. With AWS here as well, you can clearly see the margin of the business. In last quarter, it took a hit, but beforehand, we were mid-30s, even sometimes high 30s. I do expect the same thing to be seen from here on out. Looking at the backlog for AWS, $195 billion. $195 billion. And that was up 25% year over year. By the way, the AWS operating margin, they told us that that was impacted by seasonal SBC, higher depreciation, and unfavorable FX. We'll see what happens in the upcoming quarter, but still, AWS backlog, $195 billion, up 25% year over year. It's insane. And then lastly, and I've shown you this before, and my prediction is still the same. I do think that a year from now, we are going to have a share buyback program by Amazon, and they will finally start removing shares from the public market, which, yes, will help the stock outperform in the long-term future. Looking at what the analysts are expecting the company to report, again, all of this is available on Fiscal.ai. Revenue-wise, $177.5 billion for the quarter. EPS is expected to be $1.57. By the way, if we look at the current price target for the company, that sits at around $222, which basically is the price we're at today. Then looking at the free cash flow for the quarter, not surprising because like I said, it's really all over the place. Currently, consensus sits at just over $1 billion. I mean, the quarter after that's expected to be closer to $27 billion. Of course, Q4 is usually a huge quarter for these types of companies. EBIT is expected to be $19.5 billion. Last thing, and this is breaking news. Well, it's breaking news right now, not when this video will be released, but apparently Anthropic in talks for Google Cloud deal worth tens of billions. Amazon stock is down a little bit after hours, which is why you're seeing this. Stock closed at $220, a nice green candle for the day, but now we're at $218. The stock did go under the 200-day moving average, bottomed here at around 210. Since then, we've had two big green candles. As for Google, of course, on the news is up 3.2% right now. Again, you're going to see this video when the markets will already open. But all in all, Amazon, in my opinion, like I said, and like I will keep saying, is one of those buy and forget types of companies. It's very easy with this one. I do expect, again, a strong quarter by them. I do think that we are going to get that AWS growth reacceleration from them. Yes, the recent AWS issues will need to be addressed, and then we'll see what the damage is going to be. But all in all, that's about it for me in this video. Share your predictions down in the comment section below. Check out Fiscal.ai as well. See you all in the next one. Bye-bye.